There used to be a time where building something small in the UK was a legitimate path to freedom, a business you could grow year by year, look after your family, maybe employ a few others along the way. That time is ending. This isn't just a tough economy. It's not a blip. The game has changed. And for the small guys, it's become almost unwinnable. Everyone feels it some way, shape or form, but understanding it is completely different. So let's run through the reality of what's happening, fact by fact, number by number. Because what's crushing small businesses today isn't just inflation or bad luck. It's a structural shift where the costs keep rising, the support keeps shrinking, and the only people really positioned to survive are the ones who were never struggling in the first place. Let's start with this: margins. You know, the thing that lets a business actually live, not just survive. According to Startups magazine, the average UK SME is now facing a projected revenue loss of £138,000 this year. That's not a tough month. That's not what's your costs. That's a foundational crack in the floorboards. If you're a £500,000 to £800,000 per year service business, that kind of shortfall isn't uncomfortable. It's terminal. You can't absorb that and keep your staff. You can't absorb that and invest. You can't absorb that and grow. And we're not talking about risky, mismanaged companies here. These are long-standing businesses in trades, in logistics, in professional services, the backbone of our economy. They're not failing because of poor leadership. They're failing because they're playing by the old rules, in a system that's rewritten the playbook. Here's the stat that stopped me in my tracks. At the end of 2024, over 46,000 UK companies were in critical financial distress. And that number is up 50% from earlier in the same year. 50% in 1 year. Not globally, just here, just in our economy. That includes firms with 30 plus years of trading history, firms with staff, contracts, equipment, rent, systems, and they're all teetering on the edge because the costs are now running faster than the revenue can catch. Some of these businesses are running month to month, and not to make profit, but just to stay solvent. One supplier delay or one late payment, and that's the end. Now, is that just a risky market, or is it a minefield? And just when you'd think these companies need the most support, some capital to bridge the gap, fund a project, buy some breathing room, the banks pull back. As of this year, UK SMEs face a lending shortfall of £90 billion. That's how much money used to be accessible and now just isn't. Let me break that down. Because it's not just numbers on a spreadsheet. When the banks stop lending, SMEs can't win contracts because they can't finance upfront costs, can't grow because they can't hire or invest in delivery, can't pivot because recognize of change is too high, and when they do hit a bump, there's no cushion. So instead, they cut staff, they delay payments, they raise prices not to pad profits, but just to stay open. You've got real companies out there doing real work who are now being forced to shrink, not because they're losing customers, but because they're being starved of the very tools they need to deliver. It's a slow bleed, and it's systemic. Now, if all of that wasn't enough, inflation, shrinking margins, disappearing credit, we hit 2025, and the government turns the screw again. From April, employer national insurance contributions jumped from 13.8% to 15%. On paper, that might not sound like much, but in practice, it's a hammer blow. It gets worse. The threshold where employers start paying national insurance was slashed from £9,100 to £5,000. That means you now start getting taxed earlier on more of your payroll. According to the data, UK businesses are now facing an additional £25 billion a year in national insurance costs. And that's not speculation. That's real, recurring overhead that didn't exist last year. Let me try and make this real. Imagine a company with £300,000 in payroll. They're now paying over £45,000 a year just in national insurance, before they've turned on the lights, paid rent, bought stock, or delivered anything. That's the cost of a full-time hire. Gone. And for what? Nothing changed in their service, nothing changed in their revenue. The only thing that changed was the burden. The worst part, the big guys will absorb this. They've got scale, offshore hiring, financial planners, AI-driven delivery. The small guys, they're eating the whole bill themselves. It's not just that business is tough right now, it's that the structure of the economy is tilted. and SMEs are carrying the weight. Let me put it like this. Big companies, the household names, the corporates, the listed firms, they don't work like you. They offshore their admin, they automate their ops, they spread profits across jurisdictions, they hire tax planners, not accountants. Meanwhile, your average SME is still hiring locally, paying every tax pound in full, doing payroll manually, filing R&D themselves, if at all, struggling to get a loan, paying 15% national insurance on every single hire. That's not just uncompetitive, that's unsurvivable long term. We're seeing a two-speed economy, and right now, small businesses are being told to keep running, while the track underneath them falls away. Many small businesses, in an effort to offset rising costs, consider increasing their prices. However, in the current economic climate, it's not even a feasible option. With consumers and businesses alike tightening their belts, discretionary spending has significantly decreased. Price hikes now lead to reduced sales volumes, negating any potential gains from higher prices. A survey by the British Chambers of Commerce found that 55% of UK businesses plan to raise prices in the next 3 months due to increased tax and wage costs. However, this approach is not without risks, especially for small businesses operating in competitive markets. In contrast, large corporations like British Gas and Google have more leeway when it comes to raising prices. British Gas, for instance, can increase energy prices knowing that consumers have limited alternatives. Energy is a necessity, and the company's market dominance allows it to set prices with less fear of losing customers. Similarly, Google has increased the prices of its workspace services, impacting millions of users. These services are integrated into daily business operations. Many companies find it challenging to switch providers, allowing Google to implement price hikes with next to no customer attrition. These corporations benefit from economies of scale, diversified revenue streams, and significant market power, which enables them to absorb cost increases or pass them on to consumers. The complete opposite of your average small business. There used to be a time when building something small in the UK was a straight path to freedom. You could grow it year by year, look after your family, maybe hire a few people. That time is ending. Not because owners got lazy, but because the rules moved. We've just walked through it. Margins crushed to the point a six-figure shortfall can turn tight into terminal. Tens of thousands of firms in critical distress, up sharply in a single year. A £90 billion lending gap that removes the very oxygen small businesses use to bridge cash flow and take on work. And higher employer national insurance that turns payroll into a fixed cost you feel before you've even switched the lights on. None of that is a blip, it's structure. So if it feels like the game got harder, you're not imagining it. The ground shifted under small operators while the scoreboard stayed the same. Understanding that isn't about doom, it's about clarity. Because once you see the system for what it is, costs up, support down, credit thin, you stop blaming effort and start rewriting how you play. That's what it will take now in the UK to turn a small business back into a path to freedom. This is the sole reason behind founding the Ovara Group. For over 60 years, the systems the big guys used were kept that way, only accessible for them. We've changed that.